Hey everybody, this is Ian Faison from Vetrepreneur. I am here with Bob Louthan, the CEO and founder of VeteranCrowd. Bob, how's it going?
It's going great today, Ian. I'm glad to be here.
We're gonna talk a little bit today about crowdfunding for veterepreneurs, veteran-owned businesses, and folks looking to take their veteran-led company and scale it. Bob is an expert in this field. He knows just about everything about crowdfunding. We're going to talk about his military background, crowdfunding, the New Jobs Act, and let's get right into it. So, Bob, what'd you do in the military?
Well, I commissioned into the United States Army. Actually, took a reserve commission in 1982, and I was a combat engineer officer. So I spent 14 years in various reserve components in Virginia, Alabama, and South Carolina.
And so you got out of the military, and did you go right into? Did you know you wanted to go into entrepreneurship? Did you know that corporate America was going to be the thing that you did for a little while? What was the first step?
Well, I actually was a civil engineer by training and worked for several big industrial companies. International Paper Company was my first job out of VMI, and great learning position for a young person as a civil engineer. Did a lot of engineering projects, and I went back to business school. I'd always sort of planned on furthering my education, so went back and got a master's in business at the University of Virginia, and went back to work in the paper industry for a little while, and then worked also in another manufacturing company that was related to the tobacco industry here in Virginia. And it was in that job, and that was probably 12 years out of college before I realized that I really wanted to be in a financial career. So I was a career changer in my early 30s.
Well, that's pretty interesting. I didn't know that. So, I mean, obviously it's a little different with LinkedIn and all the stuff that we have now. But how did you go about changing career? I mean, that's really your second career change at that point because you got out of the military. So how'd you go about doing that?
I think when you're a young person, you think you can map out what you want to do for your career, but sometimes you make some decisions when you're 22 years old about the direction that you want to head in that don't necessarily work for you when you're in your 30s. I was, I was pretty unhappy, miserable in the capacity that I was serving, and when the time came for me to have an opportunity to change jobs, I really did a lot of introspection and looked long and hard at what I wanted to do, and discovered through using a book which many people may have heard about. It's a book called "What Color Is Your Parachute?"
Yeah.
And I actually did a lot of soul searching on that, and it pointed me in the direction of finance. There were actually four categories of finance, and I started to investigate those things, and it pointed me into venture capital and being involved with entrepreneurs. And so that was 22 years ago now, and really have enjoyed it. If you can find something that you really enjoy doing, and you can have some passion about it, and it charges your batteries when you're working on it, it's a great thing. So I really sort of rediscovered myself when I was in my early 30s, and that's how I got into the financial career.
It's a really good point, and at Victory Media we talk about all the time. It's our mantra of do what you love, and that's for folks getting out of the military, military spouses, folks looking at STEM careers. If you follow your passions and then give yourself the skills in order to kind of be in the space of whatever you want to be in, be very surprised how much easier it is to be successful.
I couldn't agree with you more.
And specifically finance is really interesting to me because it's something that a lot of folks don't think they can get into, specifically around venture capital these days. I think it's such a competitive area, and it's such an area that you see Shark Tank and you're like, I could never be one of those folks. So I guess kind of talk through how you thought of VeteranCrowd, and where did you see kind of the marketplace with kind of a large gap for veteran entrepreneurs?
Well, in order to understand how VeteranCrowd came about, we've got to go back to 2008. You'll recall that the financial markets imploded. You had all kinds of turmoil on Wall Street. And basically, at that point in time, I was a partner in a business that our primary focus was serving companies with merger and acquisition advisory work. And so when that market dried up as a result of the impact on the economy, I did a lot of thinking and looking back over, at that point in time, about 15 years at that point of doing transactions and deals. And there were things that I looked for in a client. Were they nice people? Did they have money? Were they coachable? Were they realistic? Would they finish the task? And so on a Saturday morning in 2008, it dawned on me that, gosh, every time I'd worked with a management team that had prior military experience, we had a positive outcome. And so I started to dig into that. I said, gosh, I really have enjoyed working with those people. There's a little bit of camaraderie involved in working with other veterans, shared experiences, and that sort of thing. But when you dig deep down into it, you find that veterans get some things baked into them in the military that set them up for success in the civilian world. They might not be able to run spreadsheets, and they might not have the private sector business skills that you would want, but they come armed with some other things that are fundamental and very important. They're team players. They can work with limited resources and get things done. They can organize groups of people around an objective and lead them towards positive outcomes. They can persevere. They're tough. They're competitive. We've been in a very competitive, the ultimate team sport. And so you put all those things together, and then you layer in the thing that I think is most important, and that is the personal accountability and the sense of ethics. And those are things that, quite frankly, I think we need more of in the private sector. So those things led me to start seeking clients that had military backgrounds, and that was way back in 2008. To fast forward, the way VeteranCrowd came about, and we formed the company just a little over 2 years ago. There was a confluence of a number of things. You had the Jobs Act, which we'll talk about a little bit later. I was working with a group of young people, young entrepreneurs here in Richmond, who were creating Wealth Forge, which is the broker-dealer on which our platform operates. And one of the two founders is Army Ranger. And so, working with the right kinds of target people. And as I learned about what they were doing and what was going on with the Jobs Act, I just had an epiphany one day and said, this would be the perfect marketing model for us to really effectively go out and target the veteran-led business community. So that's what we did.
And I love one of the things that when I was talking with Sharon, who's your COO, one of the things that we were talking about is you just love working with veteran entrepreneurs. And I think that that's another piece that people don't really necessarily kind of bring up, especially in the VC community. It's just more fun. Like, it is fun to work with veteran entrepreneurs because you have a common language. You kind of know, hey, I can give them X, Y, Z task, and they're going to accomplish it. And if they can't, they're going to give me the reasons why they couldn't, and they're going to find the next solution. And I think that that's a huge piece as well. It's not just because they're great business, which they are. It's because it's also just a fun thing to do, and it's more enjoyable to work with veteran entrepreneurs. And I think it's a missed piece from a lot of the investing community, and a great opportunity for VeteranCrowd.
And I agree with you completely. I mean, there's not a day that goes by that I'm not excited to work with it's a cross section for me. If you did a Venn diagram, I love working with entrepreneurs. I love working with veterans, and where I get both of them, where those two those two circles overlap, I'm in my happy place.
Yeah, absolutely. So who are the investors on the platform? And I guess explain, kind of to take a step back, how does VeteranCrowd work?
Well, so to take a real high-level look, I mean, we're doing things that brokers have been doing since the 1930s in the creation of the Securities Exchange Act. Primarily what we do are what are called Reg D private placements for these companies. So we're raising capital for these businesses and helping coach these companies to put together a strategy that'll help them put capital in and behind these growing businesses. We typically work with companies that are not the earliest of startups. We wouldn't typically work with a business that had not achieved some revenue traction in the marketplace. We see a lot of those companies, and we refer those to other resources that we know that are better suited to work with them. But our client is that veteran-led business that is trying to scale up, and that's where we get on board. Our investors fall into a number of different categories. They are and we'll talk again about the Jobs Act in a few minutes, but we'll talk about terms like accredited investors. And typically the investors that are going to invest in companies that are presented by VeteranCrowd are individuals who have high net worth. They're angel investors. They're certainly accredited, and we also market, though, to funds, professionally managed funds. We market to family offices, and in some cases we market to strategic type investors who might have an interest in investing in a particular field like healthcare or something. So there's a wide variety of investors, and what we do is help these companies prepare for and then reach out and talk to those investors and secure the capital that they need to grow.
What have been the most successful crowdfunded businesses? Or I shouldn't say crowdfunded. I should say, what have been the most successful businesses, like type of businesses? And I kind of want you to touch on the veteran-led piece as well, because I don't think necessarily everyone kind of knows what that means, and it's something that we believe in at Victory Media and Vetrepreneur, about how veteran entrepreneurs, if you are the COO founder, or if you are the CEO, or if you are the CTO or CMO, whatever you may be, you are a part of that founding team and a very important piece of that. So what are kind of the most successful veteran-led kind of type companies you have seen come through?
Okay, well, let me take a step back and talk a little bit about the definition, or how we define, our clients. People sometimes will say, get veteran-owned and veteran-led mixed, and so our criteria is that we want military veterans involved in the day-to-day operations of the business, and they're setting the tone, they're setting the pace, they're setting the ethical standards, they're there on a daily basis, and they're having an impact on the company. As opposed to a veteran-owned business, by the definition that you might hear in a government contracting circles or so.
Yeah.
And so it's not about ownership, it's about leadership. We have, I can't think of too many cases where we've seen a veteran-led business where the veteran didn't own a significant piece of it, but he's not necessarily the majority owner of the business. As you said, he could be the CFO or the CTO, but somebody who's there on a daily basis that is impacting that decision making.
Well, and it's important for our audience that, specifically for Novoba members, and folks who are looking to contract with the federal government, who are looking to, go to those supplier diversity programs and be certified veteran-owned businesses. There is a difference, and if you and your other two co-founders each own 33%, or if you have 4 co-founders and only 25% is veteran-owned, and you don't qualify to be a certified VOB, you can still work with you folks at VeteranCrowd, and I think that that's a very powerful opportunity for those folks.
I mean, absolutely. I mean, I guess there could be a circumstance where the veterans didn't own any of the company, but as long as they were in a position of leadership, and steering the ship, we would consider them.
Well, yeah, owning a 5% stake in a $1 billion business is still pretty valuable.
Still a nice day. That's right.
So how many of the folks that you're talking to are large or are small but looking to be large scalable businesses and return that 10x to the investors?
So I've been doing this for over 20 years, and I would say that generally we would like all of the businesses that we represent to have the opportunity to scale up fairly significantly. It's not attractive to the investors to invest in what might become a lifestyle business. It would grow, provide nice income for the principals. You really do need a business opportunity that's going to scale up. So we don't limit ourselves to specific verticals, but we know some things about telecom technology, or we know things about wireless communications, or we know about healthcare, certain subsets of the healthcare industry. And so, where there are opportunities for a business to significantly scale up, that's where our investors are seeking investment opportunities, and that's the type of company that we would typically look after and try to recruit as clients for VeteranCrowd.
Yeah, and I think that lifestyle business or hobby business or things like that, they are great or cash flow businesses that you can have on the side and make money, and over the next 10 years or 15 years you make a couple $1 million and support your family. Like, that is amazing, but not one of the focuses of VeteranCrowd. And I think if folks are looking to reach out to you to kind of know that you need to be able to have a business model that is looking to scale, and the reason why you need capital is to scale that business. Is that right?
No, that's absolutely true. And we're typically going to raise amounts in excess of $2 million for a company. There are a lot of reasons for that, but the smaller raise, the company that needs $200,000 or $300,000, that's not the right. We're not the right fit for that, as an example. And so typically we're looking for investors that want to build a portfolio of investments. We want investors to be repeat buyers of the offerings that come across our platform. And our strategy, in fact, is that VeteranCrowd itself takes a piece of each offering that we do, because we want to create value for our shareholders by having a portfolio of investments in these veteran-led companies as well. So in addition to marketing these opportunities, we're actually participating in them.
Yeah, and I think that it's a really valuable proposition for folks that are looking for that type of investment, because you can come in, you speak the same language. If you're going to talk to the venture capital community, even the VCs that are more military focused, they might not be able to, or they might not be looking to invest that much money. It depends, obviously. Do you have a few ways that you approach learning and mentoring veteran entrepreneurs?
We're constantly learning. I think I've seen everything, and then a company will come across our platform with something really unique. We do have a lot of experience in helping coach businesses, and we also have a lot of partners who are either investors in VeteranCrowd or members of our advisory board, or folks who are friends of the company. And when a small business has a particular need, we've developed those relationships over a long, long time, and so we can plug people in and give resources to these companies. So these young veteran entrepreneurs who need some help with, particular part, whether it's marketing or strategy or getting some doors opened in particular locations. I was on the phone earlier today for one of our clients, introducing them to a Fortune 500 company because we had contacts within that business. So we do things for our portfolio companies to help them achieve their objectives.
Is there any glaring weaknesses or gaps that you would say, hey, if you're a veteran-led company right now and you're looking to grow and you're starting to look at ways to bring in capital, make sure we're seeing this, and it is something that 3 out of every 4 are weak on legal or whatever. Are there some weaknesses there that we need to be aware of?
I'm not sure I could categorize. I mean, generally we'll see different things. People have strengths and so forth. I think that the best thing about veterans is their coachability. You get that sort of beaten into you when you're in the military, and so I think they've got thick skin, and they actually appreciate that unvarnished feedback. So when we take a look at a company, we can pretty quickly apply some things. I try not to be. I try to be positive in terms of the constructive inputs and so forth. The worst thing I think that can happen to a young company is they have somebody come in like me who thinks they know how to run the business better than that person. No, we're looking for businesses where we really want to back that entrepreneur and really believe in what they're doing, and then help them with some coaching. I'll do some things and sort of the way I envision my role is to sort of play that of a board member or an advisory board member, and so I think the really effective thing to do in that case is just kind of ask hard questions. Ask hard questions about these things or those things. And I will say probably the most glaring thing that we talk about the most is pricing, because I think veterans have a tendency to be a little sharp with the pencil, and sometimes they don't ask enough for the product that they're offering, and they need to be confident that what they have really is unique and special, and marketing is a very special art and a skill, and so finding the right price for your product, is sometimes I'll ask a lot of questions about that.
It's funny you say that. I was at a conference last week called HustleCon, which is a conference for non-technical startup founders, and it was really interesting how almost every single founder touched on the way that they developed pricing and how often they were initially tested their business model or their product for free, and they got horrible feedback because they're like, yeah, of course, we'd love to have it. That would be great. And you're like, okay, give me $5 for it. And they're like, ooh, I'm not going to do that. And I think that part of the thing with pricing and like understanding what the market, you have to talk to a ton of customers over and over and over again, and you need to understand the market really well. And I think that with veterans in the military, you don't make stuff, you break stuff, right? So you've never priced anything in your life. You've never even really, like, maybe you had a budget, or you had the bullet point on your evaluation that said I was in charge of $17 million of equipment, but you're not determining the prices of that. It's just being told to you. So I think that that's a really good actionable point is, if you are starting a business or if you are, in that process, I think pricing would be one of the bigger weaknesses of the military community. And like you said, extremely coachable and willing to learn. So do your homework on that and check it out.
That's right. And again, I think that it's important when you are building a team around your growing business that you bring the right kinds of people in to help you, and folks that have your best interest in mind. And so that's what we try to do.
One of the companies that I've interviewed, said that the number one thing that he wished he had learned was the difference between your co-founder and employee number one. How often do you see that, you know, I don't want to say mistake, but how often do you see folks who maybe should have spent a little more time carefully determining their co-founders versus first employees?
Well, I'm a victim of that myself. I mean, I've been through a number of businesses myself, and if any of my former co-founders out there see this video, I'll say hi to them. We were great friends and so forth, but I think every business, is a partnership. And when you're talking about these things, and you start out, and you guys are in sync, and you're in the same place in your lives and so forth. But as time goes by, the needs of the business can change, and so and it's hard to do when you're younger. I guess when, as you can see, I'm not as green as I used to be, and so I'm a little bit more grizzled maybe than most folks, but. I've always tried to ask myself the question, am I the right person for this position at this particular point in time? And I think, partnerships are tough. You grow and you mature, and you get a few years into a company, and you and your partners get to be at a different place in your life. You also need different skills. As a business grows. Little thing I was taught a long time ago was the 3-10-30 rule. And that's really $3 million of revenue, $10 million of revenue, and $30 million of revenue. And at each level, the company goes through sort of a transition. There's a glass ceiling at those levels. At $3 million in revenue, that entrepreneur can't watch every check in the checkbook anymore. He's got to delegate sales, and he's got to delegate accounting responsibilities, and he just can't keep his finger on the pulse like he did when he was running the business in his garage. Get to $10 million, and you run up against yet another level of complexity, and you've got to add staff, and you've got to delegate even further. And then you get to $30 million, and you need real professionals. You need chief financial officers. You need all kinds of skills to run an organization of that size. And it's very rare that an entrepreneur that founds a business can transition through all of those levels and successfully, make those transitions. So that's why you see a lot of businesses either fail or sell at $3, $10, and $30 million in revenue, oddly enough, because it's time for a change in the leadership in the corner office. So, good question. That's an entire podcast for you.
Yeah, I know. Seriously, that definitely is, and it's what's great is talking to young entrepreneurs, because they're in that exact moment where they have to choose, where they have the decision point of, do I make this person a co-founder or not, and kind of see through that process. And I think that one of the folks that I was interviewing, they hadn't even told their story yet. They were just looking back on it, and they're like, oh yeah, I guess that is how I met my co-founder. I don't really think of it that often, but yeah, it's an interesting distinction. I want to pivot here to talking about the Jobs Act. So could you kind of give like a brief kind of lay down of what this is and how it kind of affects everybody?
Sure. So the Jobs Act was passed in 2012, and it's been in the process of being implemented in stages since then. The most recent was this Monday. What they'll call Reg CF, I think, is the terminology that they're using, and this was the last and probably the most complicated rulemaking exercise that the SEC had to go through. But Congress did a good thing in 2012. They made some changes to the securities laws that were really sort of the first significant post-internet modification of securities laws. And so there have been three significant pieces of that. The first was implemented in September of 2013, I guess now, and that is an area where we spend most of our time, and that is Title II, which regulates or changed the rules for Reg D private placements to accredited investors. Later, the SEC passed some rules for Regulation A, Regulation A is a little bit more involved way of offering capital, but they raised the amount, and not many people, frankly, used Regulation A before the SEC made these changes, and we're going to see some more and more companies using this type of offering to raise amounts of capital up to $50 million. It's basically a private way of doing a public offering, and so there's some people that are specializing in that. And then, of course, this past Monday you had the sort of the crowdfunding version of all of this, and now individual investors who are not accredited will have opportunities to invest in businesses. They're limited in the amount on an individual basis that they can invest on an annual basis, and the companies are limited to raising $1 million in this fashion. But it'll be interesting to see how the crowdfunding, and how that shoehorns in and becomes a source of capital for growing businesses.
So, and I want to be clear here. So, is VeteranCrowd a crowdfunding platform? And I just want to make sure that you we say the distinction for the audience. I mean, how does it compare to the IndieGoGo or Kickstarter or those type of, or is it more of like a angels list?
Taking a step back here for just a second. So the difference between platforms such as VeteranCrowd and an IndieGoGo and a Kickstarter is that we are in a space that could be broadly defined as equity or securities crowdfunding, meaning that because we're licensed and regulated by the SEC, I can offer securities in a company. I can offer you ownership or notes or other types of investment opportunities in these businesses. An IndieGoGo or a Kickstarter is really a revenue crowdfunding operation. You have a product, you'd like to pre-sell it, you'd offer a coupon or a discount or any number of things, and that individual who puts money into the companies in that fashion is really giving them a top line item. They have to recognize it as revenue, and they provide goods and services in return for that, but not equity. And so that's a significant distinction. And then, go ahead.
No, so I was going to say, so if you're a business and you have you're selling, whatever, widgets, headphones, whatever, you could go on IndieGoGo and you could sell your first 1,000 before you even made those headphones, presumably. But those folks are going to get the headphones, but they're not going to get any equity in your business.
That's correct.
And so with the change in the Jobs Act, they're now people who you have no idea who they are, who are non-accredited investors, will have the opportunity to take equity in your company. Is that right?
That's right. If a company was going to do a Regulation CF type of offering, they do have to go through certain steps to properly structure the offering, and they do have to know who the investor is. But if an investor wanted to invest $100 or $1,000 or $2,000 into the company, they can do that. It's facilitated using online capabilities to take the subscription agreement, and that individual is allowed now to invest in a company, again, up to certain limits based on their income, but they did not have that opportunity in the past because there were very few cases where non-accredited investors really had broad access to private securities offerings, and so this does open the door for that.
So how does this differ from a friends and family round? I mean, if you're, is it just the relationship that you have? Is it the online platform? Like, how is it different where folks in the past could reach out to friends of friends and raise seed money, and now they can do this, through an online platform with folks that maybe they don't know as well?
Well, I think it's all about reach. If you think about what you were just talking about, it's friends and friends of friends, and so you have your natural local network, And so a lot of businesses raise capital exactly the way you're talking. They raise money from friends. They might have raised money from angels. It would typically be very localized, and it was certainly from your network. The beauty of the Jobs Act, both in the Title II and Title III, is that it expands the reach. There's a concept called general solicitation. And in the past, you really were restricted in solicitation. You had to solicit from people that you already had a relationship with. There was a facility for non-accredited investors to invest in companies, but it was limited in terms of the number of investors that could invest in a business and be non-accredited. What general solicitation allows us to do, and allows others, will allow companies to do that are crowdfunding in the sense of more pure sense of the word, is that now an individual who's an accredited investor in Seattle can see a deal that I'm offering in Virginia Beach, Virginia. In the past, that deal would have been seen in Virginia Beach, and it would have seen my network and whoever I called and so forth. But now that opportunity can be exposed to an investor that I don't know, that's in Seattle, Washington, or in San Diego, or in Omaha. And those individuals now have an opportunity to invest, and they never would have seen these opportunities in the past. So it really is about broadening the exposure. It increases the opportunities for these companies to meet with and find investors, and that's the most significant impact of it, in my opinion.
So for folks that are looking at this option, I mean, it appears to me that the biggest downside is that those folks are not going to be as directly involved in helping you grow the business. Like if you go to VeteranCrowd, and that's, we talked about mentorship earlier, we talked about your network of individuals that you have that can help grow their businesses. Obviously investors are going to have a very real interest in your business succeeding, but is the downside to this that there is not as close of a connection and the mentorship and the help, or do you think that that's going to be kind of solved down the road with kind of just technology, Google Hangouts, things like that?
And, another great question. So there are three pieces, I think, in response to that. I think that you're going to potentially have angel investors and other people making more investments of a smaller size. As an example, an individual who might be in your hometown, Ian, and invest in $100,000 in your business. Well, they might put $25,000 in that example I said in Virginia Beach. They'll take advantage of this to diversify more widely, and there's safety in diversification. On the flip side of that, from an expertise standpoint, I think that there are a lot of people out there that have specific sector expertise that we're not tapping into. And by being able to cast this wider net, we're actually going to find more expertise. Those people are going to be attracted to investments that might be outside of their geographic region, but they know something about that they never would have seen before. So I think that there's the potential to actually recruit more expertise, using this, and more mentors and opportunities for these companies. And if you think about it, the third piece of it is, I'll go back to my Seattle example. There may be a perfect customer in Seattle for that Virginia Beach business, and they never would have known about it if that person in Seattle wasn't there to say, hey, you need to call this company right here. They need your product. So I think that your point's very good, but I think what's going to happen over time is we're going to see a transition. You're going to see more people investing nationally as opposed to locally or regionally as they become more and more comfortable with these tools, because they're going to see the advantages of diversification. They're going to see better quality deals. They're going to see more of them. I just think it's going to have a dramatic impact in a positive way.
Do you think that the casual investor is going to shift how they view things, or shift diversification of, hey, instead of buying 10 shares of Apple, to be honest, I'd rather invest in this, young veteran startup. I mean, it appears to me that that is one of the huge advantages of this is you have casual investor money that, first of all, it's more fun. I mean, not to say that you should be investing just based off of fun, but seriously, it is, and you have much more impact. Do you think that that at all is going to be kind of an outcome of this?
Um, I think it absolutely is. The way the stock markets, the public stock markets have evolved, you know, the mass volumes are electronic trading platforms and programs, and literally the advantage of being 10 feet closer to the exchange and your wiring being shorter, literally has a competitive advantage. And so I think that in the public markets, if you look at it, the real opportunity for growth and capital appreciation is being squeezed out of that. But you look at the private sector, that's where all of the run-up in value in these great companies has been achieved. And so now more and more people are going to have the opportunity to invest in private equity, and that's where the growth is going to be for the next 10 or 15 years. So if you're trying to create wealth, you need to participate at an appropriate level for your risk tolerance. You don't want to throw everything into the private equity markets, but I think every individual has some room in their portfolio for an investment in private companies. The second piece of this, which is going to develop, is that there needs to be a secondary market for private securities, and people are working right now to develop those things. So if you've got 50 or 100 shares in a small business, there is going to be an opportunity for you to make a private transaction and liquidate those things that you might not have had in years past. So all of those things are developing to make, for a very vibrant private equity marketplace over the next 20 years.
I think as an entrepreneur, when you're looking at the opportunities of all of this and the increase in technology, I mean, you can create an MVP for a product. You can test that product online with extremely minimal resources and minimal marketing efforts and dollars spent. You can put that product on a platform, like an IndieGoGo or a Kickstarter to see if it will actually sell. Mm-hmm. You can go to investors that you did not have access to in the past and show the traction of how folks are receiving your product and potentially get investors, and then take all of that and go to a larger scale investors and say, I have this much, this many people have already invested in the seed round, this is how much I've already sold. It seems like the acceleration of businesses is so much faster than it was in the past, and I think for veterans, if they can tap into the networks of how to become experts at this, it's a humongous opportunity.
It absolutely is, and we can throw some stats out now about veterans. But after World War II, my father was a World War II veteran. Almost 50% of those veterans came home from World War II and either started or owned a business. And I would argue that effort and that leadership on their part was one of the fundamental reasons that we had such economic prosperity in the 50s and 60s, and that this country's grown the way that it is. So if you fast forward and you look at post 9/11 or even post Gulf War veterans coming back, a great number of them express interest in becoming entrepreneurs, and I'm here to support them on that because I'm a big believer in history repeating itself. And I think that we're going to see with this veteran community a similar impact, where would you be if you invested in the greatest generation? Well, I think the next greatest generation coming on is going to be a pretty good place to put some of your capital.
And I couldn't agree more. And I think the other piece of that is we need to challenge veterans to become innovators. We need to challenge those folks to say, I know you can go work, at company X for the next 30 years, or, well, that doesn't really happen as much anymore, but we need to challenge these folks to become innovators and to become the folks that are creating technologies and businesses that change our nation with the right integrity, with the right personal accountability, and with the worldly experience that we've had, fighting wars and being all over the world. And I think that it's a really important piece that, and there are so many creative ideas and like social entrepreneurs and people that are doing amazing things in the veteran community, and helping share those stories is really important. But it is truly a challenge. Like, we need veterans to innovate and to go into entrepreneurship, and I think that's a huge important piece.
There's a big misconception in the public eye that folks that come out of the military aren't creative, and that's nothing further from the truth.
Yep.
In fact, our military is unique in the sense that from the very youngest recruit right on through to our senior officers, it's always encouraging initiative and creativity and so forth. And so it's a great laboratory and a learning experience for that. And when you come out, you can bring those skills and put them to bear in the business setting. Not to beat the drum too much, but the special operations community, MARSOC and Army Special Operations, Navy SEALs. Those guys have spent years operating in unstructured environments where they must take initiative and must make decisions and they're accountable for those things. You take that and you put it into a business setting. We see a great number of those people very successful in business and in the entrepreneurial field. It just there's no limit to what people can do when they've got that kind of experience, perseverance, and integrity.
Well, when I would work with organizations on how they structure veteran hiring programs, and I think that one of the things that always came up was these words like agility and adaptability. And one of the things is, like, those are kind of difficult words to quantify, but you look at the specialist who was running a combat outpost in the middle of nowhere with three other folks, and who is a field artilleryman that is now doing logistics operations, who then gets tasked to do training Afghan National Police. That type of adaptability and do more with less is exactly what we need from entrepreneurs, and that is exactly why they're perfectly suited to go into that community. And I think you're exactly right, and the more we can get into that, I think the better off we will be.
I think you're absolutely right. Couldn't agree with you more.
All right, well, I'm pretty sure we're way over here, so I really appreciate your time. Is there anything else? Go to VeteranCrowd.com if they want to reach out to you. You can submit your information. Any other ways that they can find you?
I'll put a plug in for a couple of other partners in the business. We'll be in Austin, Texas, the first weekend in June at Patriot Boot Camp. That is put on by Techstars, and I've enjoyed being involved in that. We were just recently participants in the Muster, which was an event put on by Bunker Labs up in Chicago. That's a great organization, a great resource for young entrepreneurs who are looking for assistance in incubating their businesses and so forth. And they've spotted locations around the country. There's one in near Washington D.C. and another in Raleigh, North Carolina. Run by good people, and so I'll put in the plug for those. And then we also work with some other resources that are in the financial community, because sometimes I'm not the right solution for every company, but I always like to send these people to resources, and so we know some other resources that we can point you to if you'll reach out to us, and we're not quite the perfect fit. So, Ian, I really appreciate you having us on today. I've enjoyed talking with you, and look forward to working with you and everybody else out there in the future.
Yeah, absolutely. And if you are a veteran-owned business, sign up to get your free profile on buyveteran.com. And I absolutely appreciate your time. Send us any questions or anything that you want. We're going to have Bob on soon. I absolutely love the conversation, and we'll talk to everybody soon.
And follow us on Twitter at VeteranCrowd.
Yeah, absolutely. And send him stuff on Twitter, too. Send him questions on Twitter at VeteranCrowd.
That's great. Thank you.
Take care.